this is Andy Busch, and this is your Busch video blog update for Friday, May 3rd, although it's Sunday, May 5th, right? Cinco de Mayo. The reason why I've been off for a couple of weeks is I had a little bit of issues with the technical stuff, but we did the Busch GPS last Friday, and I wanted to get that out. So now we're back on track for doing these every Friday. Hey, great week. A lot of stuff going on. Let's just recap real quickly. We had the Fed meeting where they just changed slightly some of the language in their statement, which said that they would decrease or increase the amount of quantitative easing. So that kind of let you know that that's what they're doing anyway. That's important because I think the market was looking for them to back down a little bit of some of the hawkish comments that were made because of the weak data that was out the week. Now, more importantly, the ECB meeting, yes, they cut interest rates 25 basis points, but they really didn't do a whole lot more than that, so the market wasn't too excited about it. Draghi's press conference after said that, yes, they could do more in the future. We're still waiting to see what that means, and we're still waiting to see the outcome of what happens with OMT, outright monetary transactions. And finally, Friday's jobs data were pretty weak, right? But guess what? They were better than what the market was talking about or hinting. The whisper number, as I wrote out this week, was about 100,000. It came out at 165, but the revisions were really strong. Now, that was different from what we saw almost the entire week, whether it was from China or the United States with the PMI or the ADP numbers. They were all weaker data, and that's really what the story's been for manufacturing. It's been weak and weakening, and we know why, because it's mainly Europe, and obviously China's tied to Europe because that's their main export destination. So as we look into this coming week, here are the things that are coming up that are interesting. First of all, we got an RBA meeting, and that's on Tuesday. We'll see if the RBA is comfortable with where they're at and if they give us any guidance what they're going to do going forward. The next thing, of course, is CPI, PPI on Wednesday, and that's out for China. That's important, of course, because CPI has been pretty restrained, and that gives the Chinese authorities a lot more room to do additional stimulus, so we'll see what they do there. Maybe even ease some of the restrictions on real estate, so that's kind of keep an eye on it. And then, of course, Thursday, we have the Bank of England meeting. That will be interesting to see if they decide to increase the quantitative easing. And, of course, Friday is really important. Friday, Saturday, we get the G8 finance ministers. So the big question for the week is going to be, hey, will the yen break 100? We're back up near that level. We dipped down to 97.5. We look like we're trading in a range there. I still expect it to break up above that level and take the Nikkei with it. So let's keep a close eye on that and what the permutations of Abenomics looks like. Next, the big question is, what can stop this bull market? It seems like nothing can stop it. Every time the economy slows down, the Fed starts hinting they'll do more. Equities love that stuff. And the Dow is above 15,000 and 1,600 in the S&P. Hard to see what can slow this down at this point. Fundamentals don't really matter. It's all about the central banks. I wrote this past week and the last couple of weeks how central banks have been buying equities, and we found out that the Bank of Israel is actually stepping in and doing more on that front. So we got to keep an eye on these central players. The central banks are the key and overriding force in the markets for the equities. And that's it for me, Andy Busch. This is your Busch Video Blog Update. Have a great week. Thanks.